The government is legally required to let your money grow tax-free. I'm not talking about some offshore account, no loophole, no accountant charging $500 an hour. I'm talking about an account the IRS itself created and then quietly capped, because they know exactly what happens when people actually use it. The limit in 2026? $625 a month. That's it. That's the secret. Start at 25, stay consistent. By 65, $2,583,000. Yours, tax-free, every penny. The government gets nothing. Stick around, I'm proving every dollar of that in the next 8 minutes. But first, I need to show you what's bleeding most people dry without them ever noticing. Most Americans do the right thing. They open a brokerage account, they buy index funds, they stay the course. And honestly, that puts them ahead of most people in this country. But there's a silent tax bill running in the background, and almost nobody talks about it. Every time you sell a winning investment in a regular brokerage account, the IRS calls that profit a capital gain, and they show up immediately. At the federal level, that's 15% to 20%. Add your state, California, New York, New Jersey, and your real tax drag on investment profits hits 25 to 30 cents on every single dollar of growth. Think about what that means. You did the research. You held through COVID. You didn't sell when everyone else panicked. You did everything right. And then, right at the finish line, the government takes nearly a third of what you built. Now here's the Roth IRA and why it changes everything. Same S&P 500 index funds, same market, same returns, same discipline. The only difference? The structure of the account. Inside a Roth, you invest money you've already paid income tax on. It compounds, it grows, for decades, untouched. And when you pull it out in retirement, the IRS gets nothing. No capital gains tax, no income tax on withdrawals. Zero, because the government taxed the seed, not the harvest. That one decision, choosing the right account, is worth more money than most Americans will earn in a decade. And most people never make it. Let's run the actual numbers. You are 25 years old. You open a Roth IRA today. You contribute $625 every month, the full $7,500 annual IRS limit for 2026. You invest it into a simple S&P 500 index fund, earning 9% annually, which is the index's historical average going back nearly 100 years. And then you do one thing. You don't stop. Here's what happens. Year 10, you're 35. You've put in $75,000 of your own money over 10 years. Your balance is $111,200. Already, the market has handed you over $36,000 you never earned from a paycheck, and none of it is taxable inside this account. Most people at this stage feel like nothing is happening. That feeling is wrong. The engine is warming up. Year 20, you're 45. Total contributed, $150,000. Balance, $379,300. You just crossed the most important invisible line in compounding. The market is now adding more money to your account each year than your own contributions are. You are no longer the biggest engine in the room. Compound interest is. Your job from here is simply to stay out of the way. Year 30, you are 55, the millionaire milestone. Total contributed, $225,000. Balance, $1,025,500. You are now a tax-free millionaire. Pause on that. You put in $225,000. The account says $1,025,500. That means $800,000 of your balance is money you never worked for. It's pure market growth, fully sheltered inside the Roth. In a taxable account, you'd already be staring at a six-figure tax liability. Here, the bill is still zero. And you have 10 years left. Year 40, you're 65. Full compounding realized. Total contributed over 40 years, $300,000. Final Roth IRA balance, $2,583,400. Let's just sit with that for a second. You put in $300,000 over 40 years. Your account has $2,583,400. That means $2,283,400 of that balance is pure profit. The market built it, Compounding protected it, and the Roth IRA made sure the IRS couldn't touch a single dollar of it. Now, let's talk about what you actually saved. If that same $2.28 million in gains had grown inside a standard taxable brokerage account, a conservative blended tax rate of 23% means you'd owe approximately $525,000 in taxes before spending a single dollar in retirement. $525,000 gone to the IRS for doing the exact same thing. Same index funds, same 40 years, same discipline. Just the wrong type of account. The Roth IRA doesn't give you better investments. It doesn't change the market's returns. It does one thing, and it does it completely. It removes the government from your retirement equation. And here's what should make every 25-year-old watching this genuinely angry and then immediately motivated. This isn't hidden. The IRS publishes the contribution limits every single year on irs.gov. Wealthy families have been using this for decades. Financial advisors know it. Their clients know it. The gap between people who build this kind of wealth and people who don't isn't intelligence. It's not income. It's not even discipline most of the time. It's the 15 minutes it takes to open the right account.
Here's your exact action plan. 4 steps. Do this today. Step 1. Go to Fidelity, Vanguard, or Schwab. All 3 offer free Roth IRA accounts. No minimums, no fees to open. Step 2. Open the account. It takes less time than this video did. Step 3. Set up an automatic monthly contribution. Start wherever you can. Even $100 a month is the right direction. Work towards $625 as your income grows. Step 4. Invest in a simple S&P 500 index fund. VOO at Vanguard, FSKAX at Fidelity, SWTSX at Schwab. Set it, don't touch it. Let time do what time does. The most expensive financial mistake most people make isn't picking the wrong stock. It's waiting. Every year you delay costs you 1 full year of tax-free compounding, and at the back end of that curve, 1 year is worth more than the entire first 5 years combined. Start today, not next month, today. If you want the next level, Roth conversion ladders, backdoor Roth strategies for high earners, HSA stacking, and the exact account sequence the FIRE community uses, subscribe to Daniel Money Clarity. Every video, real numbers, real rules, no fluff. I'll see you in the next one.